The question is about diversification, and I've got a dual answer to that. If you are not a professional investor, if your goal is not to manage money in such a way as to get a significantly better return than the world, then I believe in extreme diversification. I mean, so I believe 98 or 99%, maybe more than 99% of people who invest should extensively diversify and not trade. So that leads them to an index fund type of decision with very low costs. Because all they're going to do is own a part of America. And they made a decision that owning a part of America is worthwhile. I don't quarrel with that at all. That is the way they should approach it, unless they want to bring an intensity to the game to make a decision and start evaluating businesses. But once you're in the business of evaluating businesses and you decide that you're going to bring the effort and intensity and time involved to get that job done, then I think that diversification is a terrible mistake to any degree. And I got asked that question when I was at SunTrust the other day. And if you really know businesses, you probably shouldn't own more than 6 of them. I mean, if you can identify 6 wonderful businesses, that is all the diversification you need, and you're going to make a lot of money. And I will guarantee you that going into a 7th one is going to, rather than putting more money in your first one, it's got to be a terrible mistake. Very few people have gotten rich on their 7th best idea, but a lot of people have gotten rich on their best idea.
Omission is way bigger than commission. There's big opportunities in life have to be seized. We don't do very many things, but when we get the chance to do something that's right and big, we've got to do it. And even to do it in a small scale is just as big a mistake almost as not doing it at all. I mean, you've really got to grab them when they come, because you're not going to get 500 great opportunities. You would be better off if when you got out of school here, you got a punch card with 20 punches on it. And every financial decision you made, you used up a punch. You'd get very rich because you'd think through very hard each one. I mean, you went to a cocktail party and somebody talked about a company you didn't even understand what they did or couldn't pronounce the name, but they made some money last week and another one like it. You wouldn't buy it if you only had 20 punches on that card. There's a temptation to dabble, particularly during bull markets. In stocks, it's so easy. It's easier now than ever because you can do it online. Just you click it in and maybe it goes up a point and you get excited about that and you buy another one the next day and so on. You can't make any money over time doing that. But if you had a punch card with only 20 punches, you weren't going to get another one the rest of your life, you would think a long time before every investment decision. And you would make good ones and you'd make big ones. And you probably wouldn't even use all 20 punches in your lifetime, but you wouldn't need to. Yep.
All right, ladies and gentlemen, you heard it from the stock market guru himself, Mr. Warren Buffett. Ladies and gentlemen, there is a such thing as too much diversification. Let's get it. Hey, how's it hanging, ladies and gentlemen? Of course, you know who it is. Doc Talk Stocks back again once again. Don't only get the likes up, man. You make sure you get your stocks up as well. Here in this clip, we got none other than the guru himself. Like I said, Mr. Warren Buffett, that talks about people who choose to own the majority of America versus people who choose to invest in stocks in which they're willing to put forth the effort in knowing and understanding. All right, so in the previous video that I did in reference to how Mark Cuban thought diversification was for idiots, I hope you guys checked that video out. He was basically talking about how by putting yourself or stretching yourself thin in certain companies or stretching yourself thin in the market, you're not really giving yourself a fair chance at really kind of sort of making money. That's kind of how I digested everything that he was saying. All right, now we got my man Mr. Warren Buffett here, who was telling you the exact same thing, but in reference to breaking it down to diversification at its finest, he was saying specifically that, look, if you can get rich or if you can get value out of at least 6 good stocks, you're winning. But trying to stretch your understanding and knowledge of a company to about 7 is kind of risky. So in this particular video, it seems as though he's saying that you should only really invest value-wise into no more than about 6 stocks. Now, for many of you know Berkshire Hathaway, which is owned by Mr. Buffett himself and his partner Charlie. Is it Charlie Munger? I believe for sure. I got a brain fart, guys. Chill. I think it is Charlie Munger. They have a well-diversified portfolio. They definitely have more than 6 companies in their particular Berkshire Hathaway account. But what I understood from what Buffett was saying, what I hope that you guys can understand from what Buffett was saying, was if you really want to understand and create value for yourself and invest in value companies, you probably shouldn't do that for more than at least 6 companies. Because once you start to try to understand the value of more than that, you're gonna probably spread yourself a little thin, and that's not gonna do you any favors. Okay, so for myself included, I admit that I do hold more than 6 positions in my stock market portfolio, which is sponsored by M1. If you guys want to get into that, link in the description area below. I do own more than 6 positions in different companies. I am learning that I am losing in some places and I am winning in others. Just because I'm losing doesn't mean that I'm a loser. Just because a company that you invest in isn't doing well right now does not mean that that company is not going to do well in the future. You need to understand that. All right, and I'm not gonna sit there and tell you that if you own 27 companies, you have to know every single thing about that 27 companies. I would hope you would understand at least the basis enough to give you an idea of why you should choose to invest in that company. I am praying you at least know the basis of why you are choosing to invest in that company. If you're just doing it because somebody told you so, you're probably not going to hold that position very long, especially if that position starts to lose. Okay, just going to throw that out there. You're probably not going to stay in there very long if that position starts to lose. But once you get the understanding of, well, I got an idea of where they see themselves in the next 5 years, the next 10 years, the next 15 years, I have an understanding of the reason why I should continue to rock out with the company in which I'm in right now. Not everybody's gonna have that, you understand? Not everybody's going to have that mindset when it comes to marketing or getting into the stock market and investing and building up portfolios, downsizing portfolios, increasing portfolios where, you got some IPOs that might look attractive when they come into the game, investing additional cash flow into companies that you see doing well, the ones that do give you pretty decent dividend payouts, but in a price you can afford, so you wanna keep throwing money in consistently. A lot of people are just gonna say, what's the next big thing? What's the next big thing? What can I get into right now? What can pop right now so that I can make money right now? And that right now mindset, it probably hurts you a lot more than it can help you, okay? That's all I'm gonna tell you about that. So, Mr. Buffett, thank you for your contribution to this world of investing. Thank you for everything that you taught us, for sure. You guys are awesome. Charlie Munger, of course, Mark Cuban, of course, and of course, Mr. Guru himself, Warren Buffett. Awesome individuals, guys. All right, and they're gonna teach us a lot, even if it's not anything but basic information, not necessarily about why they chose what they chose, but information on how to choose. These are the things that we need to digest as future hopeful billionaires. All right. Y'all stay true, y'all stay blessed. Don't only get the likes up, get your stocks up too. With that being said, this has been the Good Doc Talk Stocks. Take care, stay blessed, stay true. Peace.